Welcome everybody to our Trading a Smaller Account. I'm Connie Hill and happy you've joined me here today. You know, it's an exciting time to be part of the market. NASDAQ hit a new high, S&P hit a new high just today. And so it's good. There's lots of opportunities out there. We're going to kind of follow along the coattails. Rising tide raises all boats. You've probably heard that before, kind of with that idea in mind. Now, I hope you're following me on X. I'm Connie Hill CS. We have the privilege of having James Boyd in the chat here. We welcome James. He is James Boyd CS, and we'll post educational content on our X account throughout the day and kind of show you some things that maybe we're noticing in the market. But it's good to see so many familiar and friendly faces. We've got Paul, Rocky, William, Sia, Dragon Rider, Chuck, Scott, Life in the Fast Lane, David T, Bill, Mighty Mouse, and so many others. I'm happy to see you all here today. Let's go through our disclosures and I'll lay out what we're going to do for our agenda here today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for information and educational purposes only. Don't consider it a recommendation. We will be using the Paper Money software application. It's what you download to your computer. It's the most robust version of Thinkorswim. Past performance of any security or strategy is no guarantee of future success. All right, typically we want to take a look at what the markets are doing, just kind of chat about that for just a brief moment. We'll want to be looking for some new examples, and we'll look at a couple of trades we put on last week that we can follow up on today. Just kind of see how they're doing, see if there's any decisions that need to be made with those particular trades. Let's go and talk about the parameters of our class here. Now, typically, I know Barb Armstrong typically teaches that. She's helping out in the workshop in New York tomorrow. So if you are near New York and you've registered, man, go over there, have a great time. It's going to be an awesome event. In this class, we're working with the idea that we just have a small portfolio to work with. And so we're going to be more limited on the things that we select to do in that account. So we've got $20,000 of paper money that we're working with. We know we don't want any one position size to be more than $5,000. And as far as risk goes, we only want to risk $400 to $500 per trade. Okay, so we're trying to limit that. And not that we ever want to lose that much, but that's the max that we've set out here. So that normally is going to drive us to shorter term type opportunities, maybe a few intermediate term opportunities. And we're going to be trading both sides. We're going to trade the bulls and the bears. Now, the market's more bullish, we'll probably focus on more bullish type strategies. So those are the list of the strategies that we would consider doing in this class. And when the market's more bearish, of course, we're going to play to the bearish side. Okay. We're not seeing a lot of that right now. So quite honestly, I have not looked at any bearish strategies for us to take a look at today. And sometimes we'll get some situations in the market where it just is not moving up real much, moving down real much, just kind of churning, staying in maybe a defined range. And it's at that times we want to utilize those neutral type strategies. So let's go out, let's take a look at the paper money account here. And I'm going to start out with the NDX, the NASDAQ. As I mentioned, brand new highs today. Finally, last couple of days broke through that peak it had in February of this year. And yeah, man, it is on an all-time high. So this could be a flagpole here that it's forming, right? It could be just kind of working on this short pop, pop, pop vertical move up. And so, you know, some people might be saying, well, as far as the index goes, maybe we ought to let it take a breather. So we'll see. We've just broken through some immediate resistance here. So hopefully that will act as new support. And it could be in a little bit of a range, right? We've got 22,186 here, but it might be in a range from, you know, 22,053, you know, that we see that area. Now, when it's a strong resistance, it should be a strong support for us as well. Okay, let's take a look at the SPX. You know, I should mention here, as you have questions, go ahead and put them into the chat. I'll take a look at those. Keep my eye on the chat, but James will also help out with questions as well. If there's some things that I can't quite get to, he will certainly help us out there. All right, SPX, new high today. Man, we were closing in on it a few times, right? We were. And finally today, it looks like it's busted through. Taking over is a new all-time high, 6,184. Okay, so that's why we're not going to really look in a bearish direction hardly at all. You probably know what's going on with the VIX. It's been dropping. Looks like it's down maybe just a little bit here today. But it's been a while since we've been at these extreme highs, right? When we get these extreme highs in the VIX, that's usually when the market's selling off. There's fear, a lot more put buying than call buying on that ratio. And so here today, now, even though we've got a green candle, it looks like maybe it's down 19 cents right now, or 0.19, okay? So yeah, definitely staying in these lower ranges where we tend to see bullish market conditions. All right, lots of opportunities out there. Where should we look? Now in this class, one thing that's maybe we take into consideration more than some other classes is that because it's a smaller account, there might be a restriction on some of the strategies that you use and in some of the stocks that you might use, okay? Let's take a look at one that's kind of a higher price stock right now, NRG. And it looks like it's having a fresh new breakout today. We can see the technicals. This 10, or the blue is a 10-period moving average. The red is a 30-period moving average. And let's go ahead and draw in a couple of lines here because it had kind of a little bit of a peak and it was just kind of sloping down a little bit. Looks like maybe yesterday it was trying to break through that diagonal resistance. And somebody could have drawn a horizontal line here as well, but basically it's having a breakout, whether it's a slanted line or whether it is, you know, say somebody looking at it horizontally. Interesting. Where do we think it could go? Let's look back. Let's see if there's resistance on this chart that it's going to. I mean, we can see right here today that it is at a new high. Does that mean it can't go higher? Well, not usually, right? Stocks in an uptrend are making higher highs and higher lows. Obviously, never a guarantee. Let's pull up a 3-year chart. Man, it hasn't been there in the last 3 years. Let's go out. I'm going to just go out to the max real quick. Yeah, this is definitely at an all-time high here. So we don't necessarily know, gee, it could run up to this point before it could hit some resistance. It's not in that type of scenario, but that is okay. What if we said, you know, on this particular one, it's moving, it's up about 3%, almost 4% so far today on this breakout move. And let's just kind of see what maybe some option strategies we could consider. Now, just because we might pursue one particular trade with particular stock doesn't mean that's the only trade somebody could consider. Now, it's traded over 2 million shares today, which is nice, has some weekly options, and sometimes those can be fairly liquid. As we're looking at verticals, we'll do a lot of verticals in this class simply because that can be a way to grow a smaller account, minimize your risk. Yeah, you're probably capping your gains in a lot of those. But that's okay because that's how you get some of those base hits. That's how you build your growth. And some traders find that to be effective for them. Now, you'll have to see what strategies work for you. And when we're talking about verticals, typically 20 to 40 days worth of time is what we're looking at. So we have the monthlies that expire in 21 days. So we're at the short end of that window. And so some people might come out here and say, well, let's see what the August options look like. This is my open interest column, not a lot of open interest. And so when you see something like that, you just kind of say, well, let's just focus on the monthly series that are available here. So we're going to use this July series, and we're going to look for it to continue to move higher, okay? And so we're going to look here, it's at 168, and, you know, the 167.50s, does this look like a ton of people are out here, a ton of contracts? There really isn't. So we're going to have to be selective here. We're going to go a little bit deeper in the money than maybe we might normally want to do. We're going to go 165 and then 170, right? So we'll skip that 167.50. And here, let's go ahead. Let's see if the numbers make sense right here. To buy a vertical, a long call vertical, the numbers made sense a little bit earlier. Let's see if they still make sense. And it looks like, let's spread that out. Let's get it to our 165. Make sure I'm on the right one. 165, and then I said, let's go to 170. Okay, let's pull that up. All right, the net debit now is about 270. So on a $5 widespread, it's kind of in the middle, right? Where you're almost risking $5 to make $5, or in this case, almost risking $2.50 to make $2.50, but it is skewed a little bit so that it's not quite 100% return, but that's still not bad, is it? Let's go ahead and hit the lock here. 265 is what it's going to cost us in this trade for the opportunity to potentially gain what? How about 235? Yeah, $5 minus the 265 is 235. That's going to give us a 80-something% return. If we roll out the number here, let's just check it out real quick, right? We've got max theoretical gain is going to be the 235, divide that by the max theoretical loss, 265. That's going to be about an 88% return. And so some traders might say, you know, that's worth it to me to have a fixed gain, not go beyond it. Now, in this particular case, the price of the stock's a little bit higher. And so if we're trying to limit our max loss here to just 500 or 400 bucks, we can only do one contract here. So it is a little bit more restrictive on that long vertical. Jose has a question here. Is it possible to exercise from a long call? This happened to me recently. Let's talk about that. When you're long the call, you have the opportunity, but not the obligation, to potentially buy the stock at the strike price, right? The 170 leg, yeah, we're theoretically saying 170 is our obligation point, but it's kind of our hedge, right? We're bringing in a credit there, so our net debit is lower. So generally speaking, it's not sitting in a situation where somebody would necessarily want to do that per se, in terms of making financial sense. We will look at another opportunity later, actually, that we can talk a little bit about assignment. In this scenario, you've got to sell it to get out, right, in a long vertical. So let's set this up. Let's do it as a first trigger sequential. Let's create an opposite order. And, you know, one thing that we'll talk about is, do we have to get that max 235 gain to have a successful trade here? Many traders will say, no, let's get a chunk of it, right? Let's get a big chunk of it. And when we get to that point, lock those gains in and be on our way. Find a new trade. Instead of risking a whole bunch of maybe an unrealized gain just to pick up 10 cents, 15 cents, something like that. So let's just go for a chunk here. Okay, so of our 235, let's suppose we would be satisfied if we got 75% of that. Okay, so I'm going to multiply that by 0.75. And let's see if I did my math right. That's about $1.76. Okay, so we're going to add the 176 to what our net debit is already, 265. That's the increase that we're looking for. Let's see if that'll hold that calculation. Looks like it is 176 plus 2.65. So that says, yeah, when it gets up to 441, let's have an order sitting there. We don't have to babysit and try to catch it. This order sitting out there, then let the software execute it for us. Okay, 441. We're going to make this a good till cancel. We're going to follow up on this trade. Now, how hard do you think it's going to be for this stock to get above 170? Right now it's at 168.45 or 168 and change. We'll say 168 and change. And so let's see, 168 and change. So 170 is going to be about how much higher? I'm going to get my mouse there. Yeah, about that much higher. Okay, until it gets to 170. We want it to go there. Theoretically, if it could go beyond, that'll help us kind of contain and lock in that profit more quickly than if it dawdles along and just kind of stays barely above 170. We'd love for it to continue to proceed. So we're looking for stocks with movement. Okay. Kelsey says, you know, I'm new here, which is great, Kelsey. We welcome you. Where should I start so I can learn about what I'm doing right here? Let's put the trade in, Kelsey, and I'll go show you. All right, because we have new folks joining us all the time. I want you to be able to follow with the strategies, but it's more of an intermediate level class. So we're making the assumption that you're already familiar with some of these strategies, even though maybe you don't feel like you're a master of all of them per se, but you're starting to feel comfortable with option strategies. So let's send this in. We're going to hit confirm and send. We're going to keep this in my grouping called Trading in Smaller Accounts so we can follow up on it. Let's send it on. Now, we do a class called Getting Started with Options. Cameron May teaches that class. And I'm going to come over here to, I have a browser window open to our Trader Talks channel on YouTube. Now, when you have hit that blue subscribe button, it's down there in the bottom right-hand corner. When you select on it, kind of allows you to see our content a lot more easily. And so we have some layouts here so that you can find what we're looking for. In your case, you're looking for where's the beginning point with options. I want to understand this strategy and others. But see here, capture what you can, but I'm going to point the watch list or the playlist out to you, okay? So here's our our playlist. So we have some short content here. We call it bite-sized content. We've got some videos that have kind of popularity as far as a lot of views, but we've got some that are when you're new, okay? So we're going to come down here. We're going to come down to, did I skip over it? Let's see here. It's called Getting Started with Options. When looking for Cameron's face is why I'm doing this. Maybe I shouldn't look for Cameron's face. Maybe I should look for James' face, but James doesn't typically teach that class. Now, do you know what? I'm going to go, I apologize here. I'm going to go to the home because I think maybe that's where the special listing is, because we put some beginning videos so that you could find them quickly. So like here, start here with Thinkorswim. You're getting started with technical analysis, great. Getting ready for stock trading, great. Option basics and strategies. Okay, so where I came to is I went to the home. I think this is about the 4th row down. Start here to learn about option trading. And so Cameron has a series of lists, and you can see right here, lesson 1, lesson 2, lesson 3, and so forth, okay? He'll go through a series of lessons. The first one is just kind of introducing you to options. What's a call? What's a put? What does it mean? If you're a buyer, if you're a seller, what have you, okay? Starts with the very basic strategies first, and then it advances through the series, so then you're doing a combination, right? Like the verticals, like what we're talking about, it might be like in lesson 8, something like that. Further down the line, not necessarily something for you to look at. Jay Richards is saying it might be under Barb's space because Barb taught this series for a long period of time. And so I know for a while it was there, but I think they've kind of done some a little bit of organizing here. All right. Yeah, somebody's looking for something in Spanish, and we really are just teaching English. Okay. I do know Spanish, and I love to talk Spanish, but I'm not allowed to speak Spanish per se in our classes because we need to be able to, for us to be able to be monitored and people to understand what's going on in the class. So I know that might be difficult for some people if this isn't your native language, but pick up what you can, okay? These classes are for you. Okay, let's look at another opportunity here. Let's go back to our Thinkorswim. All right, looks like we got filled on our energy position, which is nice. Let's go to the charts, actually. And I'm going to show you a stock that's a little bit lower priced. In fact, I did pick out a couple of lower price stocks for us to work with here. Sometimes people, when they're working with a smaller account, you don't have to choose stocks that are lower in price, okay? But sometimes it can be helpful to you if they are, right? As far as the premiums being smaller, sometimes you run into liquidity issues, so that's something we want to be aware of. So let's look at this stock, okay? Was downtrending for a little bit, kind of formed a nice little base. And what's it been doing here? Man, it's been bouncing off this 10-period moving average, right? Run up, pull back, run up, pull back, boom, boom, boom. What is it doing today? Yeah, it pulled back yesterday, back to that 10-period moving average today, doing a nice little bounce up off of it, okay? So this is one that is a little bit lower price stock. Now, when we have lower price stocks, we might not see the weeklies in here, right? And that's what we're seeing here. We just have monthlies to work with, which is fine. That's not a problem at all. Let's open up the July options here. And on this particular one, I was also looking, there's different things you could do here. Okay, looking at some of the different strategies. We could sell a short put vertical here. Typically, we'd look for a delta, you know, a 30 or 40 something delta, but really we don't have a lot of open interest out here. The open interest is out here in those that are like way out of the money that we probably, you know, wouldn't get the kind of return we might be seeking in this kind of a strategy. Now, it's a low enough priced stock that the options are pretty reasonable here. It's only a 10-cent spread. We love seeing that. If somebody just wanted to go long, say like the 20 strike price, you know, if you're risking 400 to 500 per trade, you can do a couple of contracts there. But sometimes it's helpful because stocks, even though we'd love for them to go straight up, they don't always do that. Sometimes they wiggle around, they delay. And when that happens, that means time decay starts eroding the value of a long option. And that's why it's really helpful when you sell the one that's out of the money, right? Because you're bringing in that premium and it gives you a little bit of buffer room. You don't have to have the stock just go pop, pop, pop up to your target. It would be nice if it did. Now, the other thing with this stock we could do in this class, we could buy a couple hundred shares because it's just less than $21 here. So we could go ahead and do a stock trade here. That's not what we're going to do, but if that were something you were comfortable with, somebody could use it for that strategy here as well. All right, let's go. We're just going to use the 20 strike price. There's decent open interest here, especially for our size of an account. So we're going to do another buy vertical here. And oh, this is looking pretty good. When I looked at it earlier, it was 50 cents. Now it's up to 55 cents. So that would be our max out of pocket if the trade went against us. We could lose 55 bucks per contract. It's not what we desire to have happen, right? But we certainly could do it. And on this one, I'm gonna put it back down to 55 cents. We'll move along here so we can get filled on it. If we risk 55 cents to make 45 cents, okay, well, it's kind of that similar percentage that we were looking at here earlier, right? We could, in this scenario, we need to keep it under 500 bucks. What if we just do 8 contracts here? Okay, we're going to go ahead, we're going to do 8. That'll keep us at our risk level, our risk tolerance we've already determined. Let's do another first trigger sequential. We'll come here, we're going to create an opposite order because it's helpful to just have that order sitting out there where you're saying, I'm content to take this amount of profit. That's good for me, right? And you can be out walking the dog, you know, sipping hot cocoa with your friends, or it's summertime, but maybe not hot cocoa in summertime. In any case, you don't have to babysit. Okay, when you put your targets out there, you don't have to babysit. So on this one, again, 45 cents is we're going to try to get a majority of that 45 cents. What if in this case, we go for 70%? Okay, the last one we went for 75%. This one, let's go for 70%. I'm going to multiply that by 0.7, and I think I may have had too much in the memory here. Let's clear this out. Try this again. 0.45 times 0.7 is going to give us 31. So we're going to add 31 cents to our 55 cents. And that is where we're going to say, hey, let's go ahead and sell it. Get to that point, sell it, we're happy. That's going to be what, 81 or 86 cents? Here, make sure my math is right. I think it is. And again, we're going to make this good till canceled. And it'll put a limit out order in there. So we want to get filled at this price or better. Okay, if it can fill us more, if it can fill us at 87 cents or 90 cents, awesome, we'll take that. Okay, yeah, we'd be happy with that. So again, we're going to tee this up. We are going to send it to our trading a smaller account. I will be back on Monday. Barb will be off on Monday. So I'll be back on Monday and we'll see if we've had much progress in these trades or not. Okay, we'll have a chance to follow up on them. Now, the next one here, It might be a strategy you haven't used a lot. Okay, let's take a look at a stock that comes up very frequently in my scan that I like to run pretty much every morning. I'm looking for stocks. I call it my early morning mover scan, and I'm looking for stocks that already have established uptrends, a 1 month uptrend, a 3 month uptrend, and they're up today. Doesn't necessarily mean that they have an entry today, right? But we're looking for those characteristics of those stocks, and I'll let them start at $10. Okay, so I like to publish this. I haven't published my list yet this morning because I was getting ready for you guys, but I'll post about it most trading days, okay, and kind of show you where those opportunities lie. And that's where this stock came from today. Okay, so quantum computing. Is quantum computing kind of a buzzword right now as far as AI goes, as far as computing power? Yeah, it is. It's going to be around to stay for a longer period of time. Let's look at a longer trend here just to get an idea of where the stock's been. So super low, then quantum computing starts to become a big deal. They get some contracts. Yeah, this stock has been in the news quite a bit more recently. Now, as far as right now, and as far as an entry point, man, it was up here at 21 and change, and it's pulled back to this nice support level. So last 5 or 6 days, pulling back there. What's it doing today? Nice little bounce up. We love to get in at the beginning of these moves, right? We would love to, as the market's flowing and pulling some stocks along with it, man, if we just had a pullback and we can jump on some momentum, it's not guaranteed it's going to go up, but if it's looking like it might, yeah, we're going to consider doing that. Now, this is a $17, almost $18 stock. Okay, so again, it's another lower price. That gives us quite a few things that we could consider here. Now, on this one, it's moving quite a bit. I'm going to show you. Let's come over here, because sometimes I like to do this. I'm going to come over here. I'm going to open up this watch list. This is my early morning mover scans, and here's this stock. I've got a column here that shows what it's been doing in the last month. Now, some of these numbers are really extreme, and they're like penny stocks or low price stocks are just kind of exploding. One of those stocks that exploded yesterday and again today is this little CYN. But previously it had been super low dollars, and typically we'll say, let's see if the stock gets up to 10. If it gets up to $10, then there might be some legitimacy there that we would feel comfortable putting it on our watch list and looking for opportunities. Now, this stock, this column here is showing us in the last month, that stock alone is up 45%. So does that give you the idea of its level of volatility? Okay, volatility, the big swings that it might have, right? Absolutely. That's giving us an idea. This thing is moving a lot. What's that going to mean in terms of options? Well, it could mean in terms of options that they might be a little bit more pricey, a little bit more expensive, but there's also expected movement. In fact, if somebody were looking at this and they said, okay, it's got support here at 16.5 and it's bouncing, it's at just a little over 18, maybe there's a $2.5 move here till it gets back up to the peaks here, and just kind of, you could use it as a shorter term type trend or type trade. Okay. Let's look at its trade page, and let's collapse the options there. And as we look over here at the side, man, these are all have a lot of implied volatility in them. Okay, this thing is moving around. If I come back to the chart and go to my diagonal line here, it does measuring for us. I'm going to kind of scrunch this down. I'm going to show, let's go from this peak, that's its most recent peak high, down to the low, which was what? Like in 5 days, 5-day move? It says it's 5 bars. That move that we're showing right there is 29.64%. Okay, that is a stock that's really moving. Not everybody is going to be comfortable with that stock, and that's kind of why I'm pointing it out here. Now, if we could own the stock and maybe own it at a discount, maybe something cheaper than what it's going for right now, that might be appealing. So we are going to use these July options. Look at the open interest. We're looking in this strategy to sell a put. Okay. What does that mean? Well, we sell a put contract and we bring in a premium. We bring in whatever is right here in the bid column for the strike price that we choose. And the one I was looking at here, we'll see if this still makes sense on this one, might have moved a little bit more that it might not be. I was looking initially here at this 1550. Right now it's at a 22 delta. Earlier, it was a little bit higher delta. Let's see if there's a 30-something delta now. Then we got a 35, a 36, a 31, a 27. So typically we want to sell out of the money. Let's settle on not a ton of open interest here. So let's settle on either the 17 or the 16 where we see there's lots of company, okay? Let's go with these 17 here, okay? Lots of contracts. We bring in, for every contract we sell, we bring in $90. Cool, all right? And we get to keep that $90, whether the stock goes up, goes down, goes sideways, it goes into your account immediately. But there's always an accounting to it, right? It's going to keep track of your profit and loss that's unrealized based on what the price of the stock is doing and what the new price of that option is going to be. So we could bring in basically $90. And what some people will do is they'll consider it kind of getting the stock at a discount, because when we sell it, we're saying we're willing to buy the stock. We like the stock. We wouldn't mind owning the stock, but maybe let's see if we can get it at a little bit of a discount. Well, what's the discount? The discount's going to be whatever we sell it for in this bid column, which I know keeps jumping around here a little bit. Let's just I'm going to lock in the 115, okay? And so we'd say, okay, if we get put the stock at $17, we're happy about that. But if we received $1.15 in premium up front, some people use that to say, hey, my net debit is a little bit lower. Okay, so it's down to what, $15.85 if indeed we're put the stock. Now, it's not guaranteed we're going to be put the stock, but when you sell a put, you have to have the mentality that, you wouldn't mind owning it. And owning it at a discount, you'd be a happy camper with that. So this is a strategy that some people might be comfortable with, other people might not be as comfortable with, but it certainly is in the wheelhouse of what we could do in this class. If we were put the stock at $17, we could do 2 contracts here, right? We can handle $3,400. We've said we don't want it to exceed in our size. We don't want it to take up more than, say, $5,000 in our account if we were put the stock. But it's going to tie up some of our margin so that if we are put the stock, that we would have the capital to go ahead and do that. So in this particular one, we could do 2 contracts. We might even could squeeze out 3, but we're just going to do 2 contracts out here, okay? And so let's go ahead. Let's change our quantity here to 2. And it's still kind of jumping around here a little bit. How many of you use this strategy, are familiar with selling puts? Now, go ahead and answer me in the chat. Lawrence is saying here, could we do a synthetic? You absolutely could. What's a synthetic? Well, a synthetic is where we put on, essentially, if we're bullish, we're going to create a bullish position with both a call and a put. So on the put, would be selling a put. And with a call, what are we going to do? We'd be buying the call. And so some people kind of think of it as, well, I'll bring in the premium from the put, and that will lower my net debit on the call. For fun, I'll do that. Okay, for fun, we'll just kind of look at it. Many times people are wanting on a synthetic. It's called a synthetic because we're trying to get a delta of about 1. Okay, so that for every dollar the stock moves, both of the options are moving $1. Okay, that's what happens. So you've got to be very, very bullish on the stock in order to do something like that. Now, my plan wasn't to do a synthetic here, but since you brought it up, let's show you how you might do that. Okay, I'm going to put this to a blast all, and the trade we're going to do, actually, let's do this. Let's go ahead, execute our trade here, and then I'll come back and we'll build a synthetic for you. Let's see, midpoint here, it's gone up a little bit. Let's go ahead and try to get filled at our 115. We're going to send this to our trading a smaller account. And I want you to see here, if we were put the stock and it went to zero, this is our max loss theoretical here, 3170. Now, we're not going to sell a put on a stock we think is going down. Typically, it's only stocks that are bullish, right? We were looking for that bounce off of that horizontal support level. Okay, let's go ahead and we're going to put it in that grouping, and we're going to sell 2 puts, and we're going to use it. Okay, we'll follow up on that. Math wants to know how you can see the gamma levels for some stocks. You can pull in the Greeks if you're looking for the delta, gamma, theta, vega, right? In my custom column here, I have the things that I use very frequently. So I'll put like the delta, open interest, volume today. This probability column is probability of the option expiring. Now, getting back to the idea of the synthetic, okay? We might sell something here a little closer to the price of the stock. So what we might do here is sell the 18 put, and I'm going to hold down the control key, and buy the 18 call. Okay, so we buy the call, we sell the put, and the put costs maybe a little bit more than the call, so it would create a little bit of a credit here. All right, but the combined delta, 56 plus 43 is 99. Okay, so it's pretty close to a 1 delta, and that's the idea. So something that was super bullish, yeah, you certainly could consider that, doing that. All right, let's see here. Let's I'm not going to submit this, okay, because we're not going to follow up on that. But if you wanted to, yeah, it's a legit strategy that some might do. Again, make sure you're really, really bullish. Make sure you feel like the market's bullish, the stock is bullish, the sector is bullish, okay, as opposed to a lukewarm one. Lukewarm, it's not that big of a bounce, or maybe it's not that a signal that you feel super comfortable about. Make sure it's something you really do feel good about. All right. Truth will always prevail says, ideally, what is the optimum 0 days to expiration for a synthetic? Man, that can vary a lot, what the premium might be to bring in. And it's going to vary based on what you might use if you're doing an in-the-money trade, and out-of-the-money trade. If you're trying to sell it, just sell the decaying time because it's decaying so rapidly. But let's do one thing here. We're going to take a look at a couple of trades we did previously, just kind of give an update on it. And if we have time, there's one more trade I'd like to show you as an example for our class. All right. Last week, we had some tensions in the marketplace, okay, before the weekend bombings, okay? And we were looking at what was going on. We were seeing gold go up. We were seeing some, what are they called? Commodities go up. Okay, we were seeing maybe a little bit of activity in that area. And so we did a couple of things that at the time were showing some activity, showing some bullishness. Now it's going to be these first 2 positions on top. So AU, we did a short put vertical here. It was 4 wide. We brought in 129. The value of that spread now is 215. So should the stock have gone up to see that, or do you think the stock went down? Okay, you're saying, yeah, the stock went down. That's why these puts are more valuable and cost more. Yeah, that's what's going on. We were looking for the stock to stay above 46. Let's go just see what AU looks like. Just clicked on that. AU. Oh, good. We got filled on that. Let me come back here. We did this one actually a little bit earlier, June 2nd. Okay, so here's our June 2nd. It was breaking out. We got in, we sold that short vertical, and pretty much it's gone up. It's kind of gone around a little bit, was flat a little bit and popped up here again. Was hanging around the short strike of 46. Today, it's really fallen below that. Okay. So is it technically breaking down? It's looking like it is. It's technically looking like it's breaking down. Has the market shifted a little bit in its attitude from defensive type positions to kind of risk on type of positions? Yeah, there's been a little bit of a shift there. And I think this stock is feeling the results of that. Instead of being cautious and let's look at gold mining type stocks, looking at other areas, IT, technology, consumer discretionary, different areas, less than the defensive areas. So this might be an opportunity for us to say, okay, what happens if the trade doesn't work out like you thought it would? Now, theoretically, we could have got out of this trade early. We put in a trade to buy it back when we got a chunk of the net max gain, but it didn't execute for us. Okay, let's go ahead and let's take this position. Let's keep our long put. Let's buy our short put for a big loss with the idea that there's still enough room for this stock to drop and help make up the deficit for what we buy that long option back for, or the short option back for. Okay. So in this case, we're going to break it apart. Yeah, we've got 21 days, but the technical breakdown today is really what is concerning. Yesterday, the day before that, not really concerning. It's just kind of hanging around that 46 level. Not a big deal. Looking kind of like it may have been a support area there with the 30. But let's approach it from that angle. And I know there's a lot of you that are like, what do you do with this trade like this? So let's take this option here. We bought it. We brought in 227 on it. It's going to cost us a little bit to buy back. Okay, we're going to buy it back at a loss. But the idea here is, man, we're hoping this put drops, okay, and makes up the deficit. If we have, say, 5 days here, I don't know that, a trader would feel like they had a lot of time to have that happen. But if it looks like those spots on the leopard have changed, then it's not a bad idea to say, hey, let's see what we can do with this trade then. Okay, so we're going to buy this back. We're going to create a closing order, and we're only selecting the one option. We're just selecting that 46 that was short. We're going to go buy it back. We know we're locking in a gain here. And let's see if we can get it, maybe not quite as expensive. Let's go down. 305 is good. Let's try to see if we can do it for that. Let's send it off. And we're going to continue to monitor this. Now, the one thing you need to be aware is in your P&L open, once that leg is bought back, it's not going to reflect in there. Okay, so if you're keeping a trading journal or keeping track of the trades, what you want to do is just look at the actual numbers here. We brought in 227. We're buying it back for $3.02, so we're down about 75 cents in it. Okay, mark that down and manually track it. Okay, we want that long put to drop and hopefully start chewing in to that deficit. Okay. B is Barrick Gold. Looks like, it's down quite a bit here, a little bit more than what it was. Here we had a longer dated option. It was looking like, maybe gold was going to be something that was going to be in favor for a while, and the market's kind of changed on us. It cost us $1.89 to get in. We could go sell it right now for $1 if we wanted to. Let's just see if it looks like it's had a technical break as well. All right, so here's Barrick Gold. We got in a couple weeks ago on the green oval. You can see it was breaking above, really kind of a little triangle type scenario, some horizontal resistance, and it did pretty good there for a bit. And we were looking for it to kind of bounce around. Now, to you, does it look like this stock has broken down? Does it need the same attention that we did to AU? Okay. What you have to say is, okay, we're almost at our 50%. It doesn't have to go much more, and it'll hit our 50% stop loss, which is where a lot of traders will say, that's my line in the sand. I want to go past that. And we could allow it to do that. And really, it would hit our stop loss before it comes down here. Now, the thing I'm a little concerned about is yesterday it made a lower high, right? Had this previous high, would like to see it go higher, didn't there. Okay, so we're starting to see kind of the writing on the wall. So in this scenario, let's just go ahead, lock in the loss, be done with the trade, and not plan on playing it out through September. Now, if it were something dated, maybe say January or December, we might have a little bit more patience with it if we thought the gold scenario was going to play out. But it's having this kind of a technical breakdown, let's just minimize our losses, get out of the trade. So as we come to our working orders here, this is going to be the last thing that we do. Let's come down here to Barrick and let's do a cancel replace. And instead of being a stop here, we're just going to put in a limit order for whatever it is we can get filled out. Let's go ahead, be filled and be on our way. Now my time is up today, but we looked at what was going on, some management of some positions here in just the last few minutes. And then we also put on some new positions that hopefully will be good for a smaller account. We'll be able to follow up if there's some follow up to do on Monday, great. If not, that's all right. I do want to focus on Monday a little bit about how do you find opportunities that are appropriate for a smaller account. Okay, so that's where we're going to pick up with things on Monday. Now, coming up next is we're going to have a little break until the top of the hour. Cameron May will be back with advanced charting techniques. James, thank you for being here and helping answer some of our questions. Appreciate all of you being here as well. Check back with us in 15 minutes. We'll have a new one for you. Bye-bye.